Welcome. As we start out on this new week, let's take a look ahead for a trade to think about. And for this, we join Chris Beauchamp, who's going to look ahead in just a minute. But before we look ahead, let's wind the clock back to last Monday and take a look at what was your trade at that point, which was long gold. What happened?
Nothing much, really, in terms of price action. We saw gold weaken in the middle of last week, a bit of a stronger dollar, and then started to bounce back towards the end on Thursday and Friday. It has dropped back once again so far this morning, but you can argue that that longer-term uptrend going into the beginning of this year, and indeed further back as well, still looks very much intact. So with MACD still below the signal line and crossing higher once again, although it is a bit mixed as we look at this now, arguably perhaps the uptrend is still there, and perhaps you should be still looking at buying dips rather than trying to sell these rallies. And in any case, our stop loss at 1300 has yet to be hit.
Yeah, so technically it is still live if you're still in that position. Let's take a look, though, at this week, because, as I said, we start out a new week, a new trade of the week. What's your choice? Well,
sort of carrying on a similar vein there with longer-term trends. We go with the Dow this time. If we start out looking at the Dow, this is a weekly chart here, so it's not something we look at too often. But we do have, obviously, a substantial recovery from below 22,000 over the past 2 months or so, since that Boxing Day rally that has really careened higher since then. Back above the 50-week moving average for the first time now since November. We've also got, interesting enough, a positive crossover on that MACD below the signal line once again. Now, any positive crossover tends to suggest that momentum is shifting back in the favour of higher prices, but when it's from such a low angle, again, if you zoom out, we can see previous instances of that really back in 2015 and indeed even earlier. So it suggests that we have seen a sustainable recovery here, and indeed if you look at just the economic data, we're not really in recession territory yet, so perhaps we don't need to be quite as bearish as people thought back at the end of last year. Flipping to the 4-hourly chart, this is the other element to look at, which again shows us the trend from those lows of December still very much intact, still higher highs and higher lows. The pullback last Thursday and Friday probably needed, and those trade war fears coming back to the fore, but again, MACD on the verge of crossing over into positive fashion below the signal line. So the last couple of instances of that over the past 2 months have been strong, so we're looking to go long from here, targeting those recent highs and potentially even higher.
Where's your stop going to be?
Well, I think you could run this one relatively close. You'd want to put it, though, if you're sticking with that 4-hourly chart, below the lows we saw last week. So about 24,870 is about the rough low from last week, although you could run it perhaps down towards that 100 period moving average, 24,839. But you need to give this just a bit of room to breathe. It might take some time just to start to move higher, but that will probably give you a decent space to allow this market to oscillate a bit.
OK, all right, Chris, thanks so much indeed. Chris Beauchamp, IG's chief markets analyst there with this week's trade, which is a long trade for the Dow Jones Industrial Average.